Hello, welcome students. In the last video lecture, I had explained you the journal entries related to dissolution of partnership firm. Now in this video lecture, I am going to start with the practical sums from the exercise, that is page number 311. Okay, I am teaching you question number 4.5, question number 4.5, 6 and 7. Okay, so first of all, let us read question number 5 on page number 311. Total assets are rupees 1,50,000 of firm A and B, where cash of rupees 10,000 is included. Total assets of the firm that is given to you 1,50,000 of a particular firm that is run by two partners, that is A and B, where cash is of rupees 10,000 is included in the total assets, that is rupees 1,50,000. Okay, so here you can see I have prepared the opening balance sheet. You can read the question what it is being asked to find it out. Last sentence, prepare opening balance sheet and ascertain opening capital of A and B. It means from the data that has been given to you, you have to prepare the opening balance sheet and find the opening capital of both the partners, that is A and B. Okay, so net assets of the firm are rupees 1 lakh. The value of the net assets that is given to you, that is 1 lakh. The ratio of capital and reserve is 4:1. The capital of A is more than of B by rupees 20,000. It means compared to the capital of A, compared to the capital of B, capital of A is more by rupees 20,000. Loss of realization account is rupees 20,000. Firm is dissolved. So because of dissolution of the firm, we have to find the opening capital of the partners A and B by preparing the opening balance sheet. Okay, prepare opening balance sheet and ascertain opening capital of A and B. Now students, over here, the first sentence that is given to you, that is the total assets. Total assets that is given to you 1,50,000, out of which cash is how much? That is 10,000. So actual value of assets, that would be 1,40,000. So you can see I have written over here on the asset side, that is other assets 1,40,000 and cash value, that is 10,000. So total value of all the assets including cash, that is 1,50,000. Okay. Then afterwards it is given to you net assets of the firm are rupees 1 lakh. Now net assets value that is given to you 1 lakh. Now what is the formula to find net assets? Net assets is equal to TA. TA means short form I have written total assets. Total assets minus total liabilities. Okay. Net assets means after from the total assets, if you subtract the total liabilities, whatever the difference you get, that is called the net assets. Okay. Over here, net assets balance given to you. Total assets also you are having in the question, that is 1,50,000. So easily you can find the value of total liabilities. Okay. So total liabilities is equal to 1,50,000 minus 1 lakh. So you will get the value of liability, that is 50,000. Okay. So that value of liability will write on the liability side of the balance sheet, that is 50,000. Okay. So up till here we have found the value of the other assets and the value of cash, that is total assets. From the net assets, from the total assets, we have subtracted net assets and we got the value of total liabilities. So we have got the value of liabilities, that is 50,000, that we have written on the liability side of balance sheet. Okay. Reading the next line. Net assets of the firm are rupees 1 lakh. The ratio of capital and reserve is 4:1. Now what is the ratio of capital and reserve? That is 4:1. First of all, the total on the asset side that I put on the liability side also, because balance sheet total will always be equal of both liability and asset side. So here also I have put the total, that is 1,50,000. Now from 1,50,000 I will subtract liability, that is 50,000. So remaining balance, that would be 1 lakh. Okay, 1,50,000 total liability. From that I will subtract the liability, that is 50,000. So remaining value, that would come to 1 lakh. Okay. Now that 1 lakh is divided in between capital and reserve in the ratio of 4:1. Okay. So here you can see I have written, that is ratio of capital and reserve, that is given to you 4:1. Okay. So we will find the individually the value of capital and the reserve. Okay. So capital 1 lakh into 4/5, because capital ratio, that is 4/5, and for reserve it is 1/5. Okay. So 1 lakh into 4/5 is equal to 80,000. In the same way for reserve, 1 lakh into 1 by 5 is equal to 20,000. So reserve value that I have put again on the liability side of the balance sheet, that came to 20,000. Now the remaining balance, that is of capital. Total capital, that is 80,000. From that we have to find individually the capital of both the partners, that is A and B. Okay. For that one line is given to you. The capital of A is more than of B by rupees 20,000. It means compared to capital of B, the capital of A is more by rupees 20,000. So we have to do supposition over here. Okay. You can see the next calculation as shown to you. Suppose capital of B is equal to X, because the capital of A is 20,000 more than that of B. Okay. So we are not knowing either the capital of A or of B. Okay. So first of all we have done the supposition for capital of B, that is X. Then for A is equal to 20,000 more than of B, so X plus 20,000. Okay, now putting that in the equation, the formula, that is X plus 20,000. Capital of B plus capital of A is equal to total capital, that is 80,000. So X plus X, that will come to 2X. 2X is equal to 80,000. Opposite side 20,000 will go, then it will become minus. So 80,000 minus 20,000 will come to 60,000. So 2x is equal to 60,000. So x is equal to 60,000 divided by 2. It would come to 30,000. Now 30,000 that we have supposed for B, because x we have supposed for capital of B. So capital of B that came to 30,000. Now to find the capital of A, for supposition of A we have taken x plus 20,000. So x value that we have got 30,000. So 30,000 plus 20,000 is equal to 50,000. So now we have got the opening capital of both the partners, that is of partner A 50,000 and of partner B, that is 30,000. Total that came to 80,000. So that capital I will be putting over here, that is capital of A and B 50,000 and 30,000. Total in outer column, that is 80,000. Now you can easily verify that the total of both the sides, that is 81. Okay. So in this way you have to find the opening capital by preparing the opening balance sheet of both the partners. Okay. Now after completing the sixth sum, next sum that I am moving on, sorry, this is fifth sum. After completing the fifth sum, next sum that I am going to teach you, that is sixth sum. Okay. Let us read the question first of all. Question number 6. Prepare realization account from question number 5. It means by referring the data of question number 5, we have to prepare the realization account. Okay, now realization account, what type of journal entries we have to be posting in the realization account, already we have discussed in the last video lecture. Here we have to do the posting of the related entries from the question number 5. Okay, so let us read again question number 5 and we'll do the posting in the realization account. Total assets that are 1,50,000 and from that cash is rupees 10,000. Okay, now already we discussed that the assets will be recorded at their book value on the debit side of realization account and all the liabilities will be recorded on the credit side of realization account. But in case whenever you are recording the assets, see that all the assets except cash, because for cash we are preparing separate cash account. We have to record all the assets except cash at their book value on the debit side of realization account. So here the total assets that is given to you 1,50,000, from that cash value that is 10,000. So remaining value of assets that will be 1,40,000. So that value will be recording on the debit side of realization account. So two sundry assets, that is 1,40,000. Okay. Now as we have recorded realization account debit side the sundry assets, same way we have to record on the credit side of realization account, that is sundry liabilities. Okay. Now let us see the liabilities. Net assets of the firm are rupees 1 lakh. The ratio of capital reserves 4:1. The capital of A is more than of B by rupees 20,000. Loss of realization account is 20,000. Now loss, then it will come on the credit side of realization account. Already I have discussed both the journal entries for profit as well as for loss of realization account. If it is profit, then the journal entry that would come, that is realization account debit to partners, capital account credit. And if it is loss, then entry that would come, that is partners, capital account debit to realization account credit. Okay, so here you can see on the credit side of realization account I have written loss, that is of A and B, that is total value of loss that is given to 20,000. So it is knowing ratio is given. So So it came 10,000 and 10,000. Okay. Now liabilities. What is the value of liabilities? In the previous sum, we have found the value of liabilities as 50,000. So that same value of liability will be recording on the credit side of realization account. Just as we are recording the book value of the assets on the debit side of realization account, we have to record the value of liabilities on the credit side of realization account. So by liabilities, that is 50,000. Now, whatever the liabilities, if no any information is given, that liability is to be paid out at the time of dissolution of the firm. So considering that liability to be paid, the entry you can see that I have written on the debit side, that is realization account to debit to cash account credit, because we are paying that liability of rupees 50,000. So credit what goes out. So cash account that will be credited and realization account will be debited. So liability, whatever we have written on the credit side, that liability is paid. So here you can see I am writing that is liability paid. So you can easily understand that to cash account that 50,000, that is the amount of liability that we are paying. Okay. Just as we are paying the liability, same way we will sell out the assets also in order to pay out the liabilities. Okay. So whatever the value of the assets, that is book value 1,40,000, that assets we are selling at which price, that we have to decide. How we can decide? Here you can see now the total of the debit side, that is coming to 1,90,000. Okay. That same total I am putting over here, that is 1,90,000. From 1,90,000, 50,000 liability that we have already returned and 20,000 loss that was also given in the question. So 1,90,000 minus 50,000 minus 20,000, remaining value that would be the realized value of the asset, that would come to 1,20,000. Again remaining total, that is of liability, total of the debit side, that is 1,90,000. From 1,90,000 I will subtract the liability and I will subtract the value of loss. Okay, so remaining value that would come to 1,20,000. It means from 1,90,000 I will subtract 70,000. Then remaining value that I will get 1,20,000. That is the difference coming on the credit side of realization account. That is the realized value of the assets. It means by selling off the assets out of rupees 1,40,000, the realized value, that is 1,20,000. So the journal entry that would come, that would be cash account debit to realization account credit, because we are selling the assets. You sell off the assets, cash comes in. So cash account that will be debited to realization account credit. Okay. So realization account credit, that's why I written on the credit side of realization account by cash account, that is 1,20,000. This amount that we have found out. Okay, so by subtracting from the total of debit side the two values on the credit side, we have got the realized value of the assets. So in this way we have to prepare the realization account. From the fifth sum, we have found the we have found the realized value of the assets by preparing the realization account. Now after completing the sixth sum, I will be teaching you the next sum, that is seventh sum of the same question, that is on the same page number 311. Let us read question number 7. Total assets of the firm at the time of dissolution is rupees 2 lakh. Total assets value that is given to you, that is rupees 2 lakh. Okay. Out of which 40% are current assets including cash, rupees 10,000. 120% are realized for fixed assets. Okay, now you can see I have drawn a small table so that divided the total assets into current assets and fixed assets. Total assets value that is given to you, that is 2 lakh. Okay, out of that current assets that are 40%. So 2 lakh 40% it would come to 80,000. Okay, 80,000. And if to 40% that is current assets, then 60% that would be fixed assets. Okay, so here you can see the second part of the total assets that I have written as fixed assets, 60%. So 60% of 2 lakh, that would come to 1,20,000. Okay, so here you can see I have written 1,20,000. And over here current assets, that is 80,000. Total that becomes 2. Okay, now next line it is given to you, including cash rupees 10,000. So in this 40% current assets, cash is of rupees 10,000. So remaining current assets, that would be 70,000. Okay, here you can see again this current assets that I have divided into two parts. First part, that is cash 10,000 and other current assets, that is 70,000. Okay, now realized value is given to you of both the assets, that is current assets current assets first of all and of the fixed assets also. 120% realized for fixed assets. So here you can see what is the value of the fixed assets, that is 1,20,000. 120% of 1,20,000, that would come to 1,44,000. Okay. In the same way, it has been given the realized value of current assets also, that is 80% realized value of current assets. In fixed assets, that is more value than the actual value. Over here, in case of current assets, less value compared to the actual value, compared to the book value of the current assets. What is the book value of the current assets? That is 70,000. 70,000, 80% realized value. So on 70,000, 80% will count, will get the value that is 56,000. So the realized value of current assets, that is 56,000, and of fixed assets, that is 1,44,000. Now what has been asked you in the question to write? Past journal entries. You have to write the journal entries of related to assets. Okay. So you can see there will be two journal entries related to assets. First, whatever the actual value or the book value of the assets, that will be recording on the debit side of realization account. Okay. So here you can see first entry that I have written, that is realization account debit to fixed assets account to current assets account credit. Now fixed assets book value, that is 1,20,000, and current assets book value, that is 70,000. Already students, we have discussed that cash will never be reported in the realization account because we are separately preparing the cash account in case of dissolution of partnership firm. Okay. So here two cash fixed assets, that is 1,20,000, and two current assets account, that is 70,000. 1,20,000 plus 70,000. So realization account, that will be debited by rupees 1,90,000. Okay. Next entry, that is for the realized value of the assets. Now realized value, so due to sale of the assets, the cash or bank account will be debited because cash or check would come in. So debit what comes in. So cash or bank account will debit, that is 2 lakh, to realization account credit, that is 2 lakh. Now how this 2 lakh came? That is total of 1,40,000 plus 56,000 you will do, then you will get 2 lakh. That is the total realized value of fixed assets plus current assets is equal to 2 lakh. Okay. So next journal entry that would come when those assets are sold out and their realized value is to be recorded in the realization account, and because of the sale of assets, cash or check would come in. So cash or bank account, that would be debited to realization account credit, that would be. So students, up till now we have understood the three sums, practical sums related to dissolution of partnership firm. In the next video lecture, still I will be continuing with the practical sums. In that I will be explaining you the practical sums related to journal entries related to dissolution of partnership firm. Till then, goodbye. Keep practicing. Stay blessed.